to the accounting class. In this session, we shall take a look at adjusting entries. What do we mean by adjusting entries, and why are they necessary for accounting? Of course, it all goes back to that concept that we met earlier, the matching principle. Do you remember that? It is important in accruals accounting that we match the revenue that has been earned and the expenditure that has been incurred with the correct period in which they occurred. Suppose that we recorded a prepayment made for a year's insurance in June and had a year end on December the 31st. At the end of the year, some of the insurance has been used, so it represents an expense incurred. What happens if we do not recognise this in our accounting? Well, our expenses will be recorded as lower than they really are. This means that the figure for any profit will be too high. Our assets will also be recorded as a figure that is too high, and so the balance sheet is also going to be inaccurate. Our accounting should reflect the matching principle. We must observe that matching principle if the financial statements are to be as accurate as possible. The adjustments are often made at the end of the year to ensure that this takes place. Large corporations may record adjustments more frequently since investors place a great deal on information from interim reports. The process starts with obtaining the trial balance from the records. The next step is to identify those adjustments that are required. When this has been done, the entries are made to a journal and then posted to the accounts. Finally, the adjusted trial balance is printed. This is then used to prepare the financial statements. Once the trial balance is first obtained, a worksheet is often prepared to show where the adjusting entries are to be made. We shall now return to the adjustments. A common adjustment is that required for prepayments. Let's work through an example. Our company is Green Days, working in the field of recycling. They pay $12,000 for annual insurance in June, and it is now the end of December. What is the adjustment that is needed? The transaction to record the payment for insurance will first have been recorded as a journal entry. This will have shown a debit of $12,000 to prepaid insurance, which is an asset, and a credit to the bank account of $12,000, since the asset of bank is reduced. The transaction was first recorded on June the 1st. 7 months of insurance have expired since that date. When each month of insurance expires, so the amount becomes an expense. Therefore, 7 months of the insurance now needs to be expensed. Since the amount paid was $12,000, this means that the insurance premium per month is $1,000. So, if $7,000 have been used, then $5,000 will remain as prepaid insurance. A journal entry is now required to reflect this. The insurance expense account will be debited with $7,000 to show the increase in the expense. The prepaid insurance account will be credited with $7,000 to show the decrease in the asset of prepaid insurance. If you are looking through the accounts, you should be aware that there can be other forms of prepayment. A photocopier might be hired or rented, and the rent for the photocopier might have been paid in advance. If premises are rented, the rent for the premises might have been paid in advance. It is clearly important that the first transaction is recorded correctly, and often a business will have a separate prepayment account for each type of prepayment. This makes it easier to identify the accounts and easier to determine the adjusting entries that are required at the end of the year or at the end of each accounting period. You will be familiar with the practice of purchasing supplies and recording them initially as an asset called inventory. As the supplies are used, then they become an expense of the business. The asset decreases and the expense increases. As this happens, so adjusting entries are required to reflect the current state of affairs. Green Days has purchased $4,000 of office supplies over a period. These were recorded originally as office supplies inventory. A check of current office inventory indicates that $750 of office supplies remain. This means that $3,250 of office supplies have been used over a period. The original journal entry will have been recorded as a debit of $4,000 to the office supplies inventory account and a credit of $4,000 to the bank account. The adjusting entry that is required is a debit of $3,250 to the office supplies expense and a credit of $3,250 to the inventory account for office supplies. The expense has been increased and the asset has decreased. Since most wages use electronic funds transfer to pay wages, and because wages are usually paid at the end of the month, it might be surprising to discover that an adjustment is often required for wages payable. However, whilst it is easy to compute and pay salaries and basic wages for the end of the month, this might not be the case for some other elements of gross pay. Where employees work overtime, the claim sheets may not be submitted until the end of the month. The payment for this overtime will usually appear in the pay packet for the following month. Bonus payments and commission may also be paid at a later date. Payroll tax liabilities are already recorded in liability accounts. Bill Brewer and Tom Cobley are owed $500 for overtime at the end of the month. The journal entry needed for the adjustment will be a debit of $500 to the wages expense account and a credit of $500 to the wages payable account. The expense of wages has increased and the liability of wages payable has increased. Green Days have 2 trucks which are used for waste collection. These assets will be depreciated at the end of each year. If the original cost was $250,000 each, the useful life 10 years, and the salvage value $50,000 per truck, then we can calculate the value for the adjustment. The amount to be depreciated is the historical cost less the salvage value. Thus, $250,000 less $50,000 equals $200,000. So over 10 years, this works out at $20,000. So for 2 trucks, the figure is $40,000. The adjusting entry will be to debit the depreciation expense account with $40,000 and credit the accumulated depreciation for vehicles account with $40,000. Remember that the accumulated depreciation account is a contra asset account. Whilst most business is carried out with customers who have credit terms, Green Days offers a discounted rate to those who take out a contract for recycling and make a payment in advance. The Atlantis Herald has made a payment of $80,000 for the collections that will be made over the coming 3 months. Receiving payments of this type represents prepaid income and needs to be recorded as such. Until the collections are made, this payment does not constitute revenue. It remains as a liability, since the payment would need to be returned if the collections did not take place. The journal entry here would be to debit the bank account with $80,000 and credit the liability of prepaid income with $80,000. When the service is carried out, then the figure is no longer a liability and a second journal entry would be required. This would debit the prepaid income account and credit the sales account. Consider this adjustment for Smoky Supermart, who paid Green Days $90,000 at the start of December. This was recorded as prepaid income. Now we are at the end of December and an adjusting entry is required. The original journal entry debited the bank with $90,000 and credited the liability of prepaid income with $90,000. By the end of December, the position had changed. Green Days have provided a service for a month and this revenue has now been earned. So we make our second entry that acknowledges and records the change. We debit prepaid income with $45,000 and credit sales with $45,000. We also need to recognize that some liabilities will not appear as invoices at the end of the month. Most of us will be familiar with the practice of electricity and other utilities reading meters and then sending out the bill after the end of the month. We are also familiar with the property tax bill arriving towards the end of the year, not at the start of the year. If we planned our household budget so that we ignored these liabilities, we might struggle to pay property taxes when the bill finally did arrive. A business should follow the practice of estimating an accrual so that the liability is recorded at the end of the month. The estimate should be made using sound information. Usually, this is based on historical records. When Green Days comes to the end of the month, they need an estimate for electricity. Based on previous usage, they estimate $2,300 of electricity has been used. They now need to enter this to the accounts. To do this, the journal entry would record a debit to the utilities expense of $2,300 and a credit to the liability of accruals. When all the adjusting entries are determined, entered into the journal and posted to the accounts, the final trial balance can be obtained. The final trial balance will then be used to provide the information we need to extract and construct the financial statements. This ends our session on adjusting entries. Thank you for watching and for listening.